Gold is up 55% the last year, and it's way outperforming the S&P 500 and the rest of the stock market. This year, it's up 21%, and gold seems to be in a very bullish cycle that we've seen in the past, where it made very, very huge gains. In this video, we're going to study the historical price action that is very similar to what gold is doing now, and from that historical price action, we can predict what gold is able to do next. Then after that, we're going to be looking at gold miner stocks which profit the most from gold increasing its price. We're going to see which of those stocks is likely to be the most profitable so that you can make the most money from them. Then we are going to be looking at gold ETFs for those who don't want to buy the stocks. You can have the ETFs. We'll see the leveraged ETFs, the non-leveraged ETFs, so that you can get exposure in gold and not miss out on this huge gold cycle. Before we go in, I want to let you know that this channel is mostly meant for people who are interested in swing trading and long-term investing, but using technical analysis and a little bit of fundamental analysis. So if you're a value investor, a day trader, or a person who just dollar cost averages, then this video might not be for you. You can just click off because we're going to be going into a lot of details. But if you want to stay and learn, you're welcome to do that. I just don't want to waste your time. It's all technical analysis, and we're going to go really, really deep. But for those who are interested, let's dive in. So here I do have my weekly chart of gold, and then I have the daily chart. So on the weekly chart, we always want to have the 10-week and the 30-week simple moving averages. These help us see the longer term picture. Then on the daily chart, we want to have the 20-day exponential moving average and then the 50-day simple moving averages. These help us know when to get in and get out. Those are all you need for moving averages. So let's first see what gold is doing currently, and then we shall see what it did in the past, and then we can see where it might be going from here. So the first thing we can go to is this weekly chart, and we see this very, very huge base, something called a consolidation. A consolidation is where the price of the commodity just doesn't go anywhere for a long time. It's more like the stock is sitting. Of course, there are minor moves in here, but really for long-term investors and everybody, they're not making money from it. And gold is not something which gives out dividends. So really no one is making money here. So that's why it's called a consolidation. It happens in all time frames. This consolidation happens for 4 years and gold breaks out. One little trick that I'd like to let you know is that if you want to know the time when it is about to break out, the consolidation, I like to put this value called the 1.5 average true range. If the consolidation here is less than twice of this value, then you just know that it has compressed, and once it jumps out of that compression, it's likely to explode. If you look at all of the previous corrections, they were way bigger than that, because twice this value is about, let me say, 5%. So all of these consolidations are way bigger than that. So we know that, okay, it's not yet ready, but whenever you get something tight like this, and it breaks out of that, that's when the major move is about to begin. That's the first tip for you to know. So we see a 4-year consolidation. And after stocks get out of these big bases, like 4 years, then we know it might run for about 2 years, right? So the move started from about Feb 2024. So 2 years would be around Feb 2026. So it is not yet fully done with its move. This is a very, very big base, and we're expecting it to run for a while. But where is it likely to run up to? We first see that currently from the breakout, it is only up 60%. And then this makes me say, let's go check what happened in history to see where it's likely to be going next. So if I go back in history, we're going to use the monthly chart because weekly chart might be a little bit too slow to scroll through. We're looking for a big consolidation that takes at least 4 years. So 2008, 2009, this is about 1.5 years. Consolidates, it moves up 90%. That's from 1.5 years. So not 4 years. Let's go back in time. Keep looking for it. Do you see it? I think I've seen it. It's right here. This is a consolidation I wanted to show you on the monthly chart. So this one went from 1974, right? You can see the tip here, to about 1978. That is 4 years as well. Interesting, very similar, because price always repeats itself. It's not going to be exactly the same, it's going to rhyme. And then after it broke out from the top of that consolidation, what do we see? What percentage did it go up? It went up 350%. So if we were to go back in 1974 terms, that means that gold currently is just around here It's around, it's doing the equivalent of $285. So it has not really gone off wild, right? And then here we count the bases. So bases are when you see these consolidations that take 3 to 4 weeks. So the first base is here. You see this? I would call this a base. Because what you want to have is something called a cap and a handle. So here we know that, okay, this is the main breakout. So this is base 1, base 2, base 3, this kind of mini thing, base 4, I would call it. And then it has an explosive top. So this is something called a climax top, where stocks they just keep running up like a madman. This is a climax top. And if you're in one of these climax tops, you're going to make the most money that you have ever seen in the shortest amount of time you have ever seen. And I don't think gold has done this yet. We can see that the last time it did a 4-year consolidation, it went up 350%. Currently, we're only up about 50%. So that means that we still have a very long way to go. If gold goes to 9,000, don't call me crazy, because these things can happen. Because a long time ago, nobody thought gold could come to 3,000. It was like a very major number, and now it has happened. If it goes to 9,000, I don't know what people are going to think. Anyway, that's the first thing. So we've gone through the history, and our next thing that we're going to look at are which gold stocks are setting up, right? Because the gold stocks will move close to the price of gold, but they're not going to be exactly the price of gold. So which gold stocks are setting up? The first one I like to look at is AU. So we go back, switch this back to the weekly chart. So what are we seeing in AU? We see a big base as well. Tries to break out here. Remember, we keep our daily chart. Tries to break out here and then returns. So this is very common in stocks. It breaks out and then returns to the entry. And then it breaks out again. So this is a very good breakout, I would say. The best day to buy it was here on 10th April, but I'll say that this video is a bit late. So for a very long-term investor, I think you can still buy it. Hopefully it can come back. But this is something called a breakaway gap, and you don't want this gap to be filled. Right now, it's very extended. When stocks are very extended away from the 20-day simple moving average, they always try to come back to it. But what we are seeing is a very huge breakout. Look at this breakout here. This thing looks like it's going to be going for a while, I'll say. I don't know how long it is, but it's showing very good signs, like for a very big breakout. We're also seeing volume on the breakout. So this is a very good sign. I would say it's one of the best gold stocks right now. If you're a long-term trader, what I would do right now is I would buy, put my stop here around 12% below. If it comes and stops me out, that's okay. Maybe you can just risk about 0.5% of your account. But of course, if you sign up for the newsletter, I'll be telling you these things before they happen. So here we see it, cup and handle, breaks out. It's looking good. It's breaking out right now, but gold broke out for a long time ago. The next gold stock that I like is called HMY. If we look at the weekly chart, what are we seeing? We also see the same cup and handle. So this video is a little bit late. I don't like bringing videos to you guys late, but I tried. This week I was very busy. I couldn't release the videos very quickly. Sometimes I see them, but making a video does take time. So the best time to buy this one was here, 6th March. And it is, we don't like the gap to be close, so stop would have been 6% right now. You're already up in the money. But since it's a very huge base in gold, I think it's likely to run. But right now it's overextended, so I'd wait for it to pull back. Or I'd look for a stock that's not overextended in gold. And then it looks like it's trying to go to all-time highs. It's trying to go to a price that the stock has never been in. So that's always a very good sign, HMY. Those are the two best, and then these are more like laggards. There's AGI. You can see it's all-time highs. It's a gold stock. I'm loving it. It's looking good. There's some swing trades here that I was trying to show people how you can profit from them. Just ignore those. I'll hide this. Okay. Yeah. So this one I would say is overextended. It's very far away from its breakout in the base, so I wouldn't trust it as well. But if it does pull back, I think it's going to be very good, because if we look on the weekly chart, we do see the volume. You see this very huge volume. It's breaking out. That's a very good sign. Then we have AEM. You see all the stocks have very similar patterns. Are you seeing that all the stocks have very similar patterns? So that's one way you can catch big moves in the stock market. You study the primary market, which is gold. Then now you look for stocks that profit from gold, which are gold miners. And you can see that all the gold miners are having the same. So now we are done with the gold stocks. What about gold ETFs? The first ETF is UGL. So this is an ETF. So these are some old swing trades. You can ignore this. These are for the people in the newsletter. Take this out. Yeah, so these are for people in the newsletter. Okay, so we can see that this one tracks gold, and it tracks gold times 2. So gold from here moved 50%, but this one did 109%. So that means it is doing way better than gold. So when gold does a very huge breakout, you can just buy the ETF, and then you don't have to be in gold itself, because since gold is a very slow mover, then the ETF is going to be moving faster. But if you're looking for a little bit more excitement, this is a ×2 ETF. Then there is a ×3 ETF. So that ×3 ETF is called Shiny. So for every 1% that gold moves every day, this one will move 3%. But this is on a daily chart. But if gold moves 10% over a week, it doesn't mean that this one will move 20% over that week. Leverage ETFs provide you a contract only for that day. So if gold percent moves 2% today, then the Shiny ETF will move 6%, which is 2 times 3. So here, gold did, you see on the breakout here, gold 26th Feb, gold is up just 56% or 60%. Shiny, which is a ×3 ETF from that same time, is up about 180%, which is actually close to that ×3 value. But of course, since you're in the Shiny ETF, you're going to have bigger swing downs as well. So here, you had to go through 20% consolidation. Here, 23% pullback. So you have to get used to those things as well. That's the price you pay for being in a more volatile. Bigger returns, but more volatile. I hope you found value in this video. I hope you liked it. Please hit the like button so that it can help the channel grow, and share the video to everybody else that might be interested in this kind of work. Thank you for your attention, and may the markets be with you.